Now let us look at what is the difference between the calendar year and fiscal year when we are talking about the income statement. Regulatory laws actually requires us to prepare the income statement, balance sheets and cash flows, that is the annual report, every 12 months. And these 12 months can be designed or decided by the companies in many regulations. Some of the companies choose the calendar year, and the calendar year actually starts from Jan and it goes till the month of December. So many companies who choose this kind of a year is actually following the calendar year. Now there are many companies who prepare the tax reports and annual reports every 12 months, but they do not require to kind of present this in a calendar format. They choose a fiscal year. What essentially is a fiscal year? Any other month, starting month, which is different from the one above can be known as a fiscal year. So a fiscal year can start from Feb and it can go till the month of Jan. So we are talking about 12 months period, but it starts from Feb and it ends in the month of Jan. It may even start from March and end in the month of Feb. Likewise, it can start in April and end in the month of March. So all of these are actually known as fiscal years, and companies have a leeway for choosing different fiscal years as per their situations or business. But the first question that should come in our mind is that why would companies would choose a different year from the calendar year? So this is the question that we will kind of try to answer. The reason why companies may be choosing fiscal year over calendar year would be associated with the business cycle or the seasonality associated with their products. Let's take an example of a retailer. Normally a retailer may show a lot of seasonality during the months of Christmas as well as New Year. So for the argument's sake, let's assume that this retailer had a very good good season in the month of December and January because of Christmas and New Year. Now this expectation would have been that the same result would also happen in the next year. Now I'll change the scenario, and in this case I'll assume that the retailer did not do good in the months of December and Jan. Now what if we would have taken the calendar year? If we would have taken the calendar year, we would have actually taken these set of months where one good month would have been taken and one bad month would have been included. So this kind of calendar year would not have reported the right results in terms of seasonality. Had we chosen a fiscal year, the result may have been slightly different. What is the objective? The objective was to capture the effect of seasonality. So these two seasons should come in one fiscal year and the other red months should come in another fiscal year, so that the comparison is peers to peers. In calendar year we saw that it is taking half of the good year and half of the bad year. So effect of seasonality is not captured here. So these 2 months to be included in a fiscal year, we could actually take any of the fiscal year starting from Feb till Jan, or March till Feb, or April till March. So say for argument's sake, if we choose this April till March, we would note that this fiscal year would actually include December and January both in this current year, and December and January both in the next year, and comparison would have been effective while considering seasonality into picture. So this is the reason why fiscal year is kind of included. Let us look at some of the examples of companies as well as countries following calendar year and fiscal year. The US government in fact follows a fiscal year which starts from the 1st of October and it goes till the month of September. So this is what they kind of follow. However, for the companies in US, it is not specifically mandated that they need to follow from October till September, The companies can follow their own set of fiscal year policies or calendar year policies. Say for example, Google actually follows from January till December. This is their calendar year. That's what they follow. Colgate also follows the same calendar year. It starts from January, ends till December. However, Procter & Gamble, P&G, actually starts its fiscal year from 1st of July and it goes till the month of June. So, you can see that companies actually choose different kinds of fiscal year as well as the calendar year. Like the US government that follows a fiscal year starting from 1st of October, there are other countries which follow different kinds of years as well. Just for argument's sake and giving you more examples, Australia actually follows a fiscal year starting from July till June. United Kingdom, UK, actually follows its fiscal year from 1st of April till 31st of March. India actually follows the same thing from 1st of April till 31st of March. And China follows its year from January till December. So you may see there are a lot of diversity in terms of choosing the calendar year and fiscal year. Very important to note, because when we are looking at comparing various companies, say for example you want to compare Colgate and Procter & Gamble, you may not be able to compare this calendar year of Colgate with the fiscal year of P&G. You may have to kind of normalize some set of numbers, which we will discuss in details in advanced classes.